Hello and welcome to another Tuesday Tidbit. Today's Tuesday Tidbit is what is a transitional home equity line of credit, also known as a HELOC? So, pre 2008, there used to be a lot of bridge loans, okay? And a true bridge loan at the time, anyways, they would go up to 100% of what your house is worth. If your house was worth, $500,000 and you owed $400,000, they would give you a loan for that extra $100,000. They would literally go up to 100% of what the value of your house was. Also, pre 2008, pre Great Recession, bridge loans were loans that were structured so that they were only meant to be used for a couple months. Okay. Well, what did we see during the housing bubble and when it was popping? Houses sat on the market for really long. I mean, loans were meant to be used for only a couple months, were being used for months and months and sometimes years as the property just sat there on the market. And we saw values decreasing. So 100% loan to value became 101, 102, 105% loan to value as the values kept decreasing, but your loan amount stayed the same. So 2008 happens, and I joke that lending got rather boring. And by boring, I mean all these kind of crazy loan features like bridge loans, interest only loans. I've started to come out, negative amortizing products. A lot of these kind of crazy loan features started to kind of disappear very quickly. Well, fast forward to now, and all of a sudden we've started to see these loans start to come back into the marketplace. We are starting to see interest only loans again. We're not really seeing negative amortizing loans, but we are starting to see bridge loans come back. A transitional home equity line of credit is our version of a bridge loan. Okay, so we can do a loan against the equity you have in your property, and you can use that money as a down payment on the new house. We still have to be doing a first mortgage on the new house that you're buying, but it is a way to get access to the equity in your current house for the down payment. Another big difference between today's transitional HELOC and yesteryear's true bridge loans is they will not go up to 100% of what your house is worth. They'll go up to 80% of what your house is worth now. So transitional HELOC is our version of a bridge loan. It's not a true bridge loan, but it does allow you to get the access to the equity you have in your current house to use that as a down payment on new property down the line. If you have any questions on that, let me know. A little bit of, a couple odds and ends that we probably should get into, but it is a great product to give you access to more capital for potential down payment without having to sell your property prior to buying the new one. Hope that helps. See you next time. Thanks. Bye.